Good afternoon, everybody. This is Gary Full from LTG LLC Trading Company in Chicago, actually suburb of Chicago. I want to do a little webinar today, a little YouTube webinar, based upon the status of the E-mini S&P for today. I think it's extremely important to understand the Wyckoff structure to where we're at. So first, let's do our disclaimer. There's substantial risk of loss in trading commodity options. Past form are not indicative of future results. The opinions are those of Gary Full LTG LLC are not to be taken recommended by or sell commodity options. It's based upon the teacher Richard D. Wyckoff. There's also a disclaimer on the left-hand side of this chart. Please read it for educational purposes. My website is www.ltg-trading.com. My email, if you want to reach me directly, is gfullett@ltg-trading.com. With this webinar, I'm offering a free 2-week Wyckoff newsletter that I do daily, a free one-on-one webinar for you and I discussing anything along trade-wise, a Wyckoff simplified series, which is 10 webinars between 30 minutes and 40 minutes each, covering around 10 different topics of Wyckoff explanation. You're more than welcome to look into that. It's on the website. And let's go forward from here. So, as you can see, the market has basically made a new high in the late part of July. The market has some type of change behavior by the selling that occurred. This selling that occurred was initially selling, but it eventually started to take out these particular previous lows of the market. And they were seen as support, but as the market goes through them, they became the support being broken. When we talk about the left-hand side of a trading range, is after the market has gone, in this case, for the upside to down. In this particular case, the market was moving higher. As long as more get into the market, as the price went higher, we saw some type of change of behavior by this particular bar. This bar increasing volume, increasing bar length, indicating that the sell stops were being hit, the long liquidation of the market. As the market attempted to go higher the next day, more selling, more volume. The volume came in simply because more of the longs were liquidated positions, and this composite operator defended the resistance. As you can see, in this particular range, we see the market having fairly high volume. We calculate volume or liquid volume for the area that volume is trading in. So on this left-hand side, after the market moves up from the right-hand side, this left-hand side that we have is fraught with larger range and larger volume to the market. So we have sideways behavior. This is where your level of knowledge in trading is very, very low. There's much higher risk, and there's a higher reward because of wide swings, but the risk is too great really to be involved on a swing basis. The railers are sharper and the brakes are sharper as the market forms the left-hand side and builds cause going to the right-hand side. So we see increasing volume, large volume, as well as wider range. It makes the trade more difficult than it normally is. Trading is always difficult. There's always a lot of risk in trading, but more so when markets are wider swinging, because they tend to take out supports and take out resistance more readily, whereas the market tries to consolidate, but there's a battle between the bulls and the bears that are occurring. So closes as well in this left-hand side of the market during this markdown phase or the selling phase, the closes are not significant because on the left-hand side the market is not ready to move up or move down out of the range. So high-end closes or low-end closes primarily are because of the news of the day. A bullish day, the market will tend to close near its highs. On a bearish day, the market will tend to the lows. But it doesn't mean anything as far as the market breaking out, because on the left-hand side, we generally see the market going sideways and building cause to the market. So this volatility can last hours, days, weeks, months. We really don't know how long the market can actually have, the market-wise. It could be much wider and much longer than we can anticipate. So we watch the market structure of the market to see exactly when this ends. As the market continues to trade, we continue to go sideways. This builds cause like gas in a car. The larger sideways that we go, the further the potential move can be. And the potential risk is greater when the market makes a move when it has cause. So this is very significant. So we generally will look at the area of the reactionary low and this reactionary low here. This will form our trading range cause, which is a situation in which the markets tend to spend most of their time in as they're preparing for a trade for the next move, and they're preparing for the next campaign, either up or down. So as the market continues to go to the right side, the market builds cause for the next potential move. So right now, as of today, the market is just really starting the left-hand side. You can see a high-end close yesterday, a low-end close today, and the market had a smaller range today, but the volume is still fairly high. So again, your level of knowledge here is not great. Your level of knowledge increases at the edges, at the support and at the resistance, and it increases even more on the right-hand side of the market. We get a better handle if the market's going to leave that range. So any questions, please feel free to contact me. Please take advantage of the free offers. The website has a lot of free webinars. You're able to archive them. With archive, you just have to click on the link. There's a lot of free webinars on the site at www.ltg-trade.com. So I hope you understand today's lesson as far as the left-hand side of the trading range being volatile with large volume, market a battle between bulls and bears as we go to the right-hand side where level of knowledge increases. I want to thank you for taking your time for the day for listening, and I wish everybody a good day. Thank you for your time. Good night, everybody.